All right, we're live.
Hey, good morning and welcome to Unenjoyment Friday, August 2nd. We just had non farm payrolls down on the floor. We used to call it Unenjoyment Day um, because you had no clue which way it was going to go. Um, wow, we're down heavy. Everybody can see that. A couple people I saw may had some good shorts last night. I pretty much just kind of avoided. I've had like two just kind of crazy days with a bunch of appointments. Outside of like a couple trades late yesterday, I was just a little out of sync, and that's what happens when you have to step away for some personal obligations. It's like you will lose a little bit of the flow and continuity to the market. So you need to reestablish you need to put a little time back in the seat, reestablish your various levels, areas of interest, and sit back on larger time frames to see what's truly going on. The kiss of death is to be away for a bit and automatically come in and start looking at a 30-second, 1 minute, 5 minute chart. Absolutely crazy. You have to know where the overall forest is, where all the paths are going through the forest, where and that kind of and that provides some correlations with things too, in significant areas of interest. You've got to know what's going on around you. Dan did a nice job on his Russell IWMs, so that was really good play. Maintained a pretty high level of confidence on that. That was very impressive. Um, you saw my note in the room. I didn't have any puts. I didn't have anything. It's like again, given what was going on, I really just I was 100% cash and margin. A couple days ago, I was already trimming a bunch of the profits. I did get hit a little bit yesterday on the down move after the huge up move. Fortunately, some buys I had in Meta really pretty much offset that, but it was really just some smaller other mixed long-term positions. You lose a little bit on, and that all just kind of adds up. But really not much of a red day. It was basically minor red in the long-term account, which was unusual. I was getting texts from so many friends of like how they're what's going on with the market. Nobody can figure it out. Their 401ks, everybody's just like getting smoked. Well, guess what? Hopefully, that's when either you need to be an active trader or you need to have your funds with an asset manager. And those guys are focused on different durations and they're diversifying your assets. So that's really pretty key relative to that. On a trading side, a bunch of people, I went through the text. While I was away, I was monitoring via mobile. A lot of guys made some like incredible shorts. I saw that Lee had a nice short. I think Leon was short for a while. Dan caught the short, rode the wave, and a bunch of other people. Bloom had a nice day, I saw. So hopefully a bunch of others were able to follow those guys while they were in the room. Um, I have up is the daily SPOO chart, and you can see that where we're at, the massive red bar, you see between the lines right above, we've got that 54, 34, 38 area, that band. You kind of knew that if we passed below that, there was a really good chance we were going to trade into this 53.95. So there was a good 40, 50 points moves to the downside. But that didn't really happen until the unemployment number. Um, anyway, so I kind of come back and circle these areas in here. We're back in middle to late May and beginning of June, where there's a substantial amount of resistance and support before we took off to our highs. Unfortunately, this is a very wide band to establish any particular level of interest to get long. And you kind of just need to go off of what NDX is doing and potential some oversold conditions and take advantage of a long. You got to have a pretty definable level, and that can be hard to get when the markets are really moving around like this. This morning, since unemployment, you had one, two, 3,000 lots flying around in the SPOOs. So that can definitely rattle. That can rattle people, and you've just got to massively reduce your size if you're participating to absorb, what you think is 3 to 5 points risk, in a heartbeat could be 10 points of risk. And if you don't have your stops in to kind of trigger, you easily could get flushed out and then it rallies. But it's more important to protect your capital. You can always get back in the trade. There's always plenty of trades. For 2 weeks, we've been trading futures. We've been killing it. So it's just, I mean, what a fantastic time to be trading futures. Um, my thoughts for the day is I'm just gonna, let's see here. I'm just gonna be looking at how things react down here going into, 8:30 Central for like how the market's going to react to our oversold conditions overnight and pre-market. So I'm just going to be waiting, looking for the reaction there. I mean, at least overnight, we've established we see in the SPOOs that the 5377 area, clearly that was an area of interest, and a lot of buyers kind of came in, and we popped it up a good 80, 25 points, 25 points. So that was a definable area. Once again, a little bit oversold here pre-market, but we're just going to have to see how the real-time hours indices behave. Um, that is, I'm gonna leave it there because we're kind of trading off of the futures here. Obviously, I mean this is a daily on the SPX, and one thing of note that I did see is this 53, 75, 77 area was a gap close. But you also have the spread was 35 points, so 35.80, so 54.15. We've already traded below that, so we basically right now we would open up kind of what yeah, we'd be opening up right in this area here. So let's see how this area is respected at the opening, and we'll just go from there. We'll post levels and ideas, thoughts on maybe for a couple opportunities. Remember, it is Friday, Capital Preservation Friday. That is not a joke. That is a real thing. Because if you've had an incredible week and your just account get blown out, or all of a sudden you have like let's say you give away 20% of your profits on the Friday, you're not going to be feeling very good about yourself. Very key part of this, just like any other sport, is like you can have the greatest skills, but the real key, the silk lining, is to have the strength of mind. It's that space between the 9 inches that you know that enables your execution. That enables you to be comfortable. That enables you to participate. That enables you to participate in sitting on the sidelines and not doing anything and being comfortable about it. So with that, I will hand it over. Dan is out this morning. I will hand it over to Lee, and we'll see what he's got to say.
I never have anything to say, but I'll try. Let me my screen. All right. Well, let's zoom out here. Actually, let's first of all, well, you can see, I guess it doesn't matter SPY or ES, but you can see this is basically a bear flag, bear down. I mentioned it last night in chat. I drew this line on the SPY. And, we were holding over this 50-day moving average, and we've finally lost it now. We've broken this trend line.
I'm sorry, I didn't mean to interrupt, but can you tell us what price correlates to what you're looking at there? It's hard to even see it. Thank you.
Let me zoom in there. So we had this lower trend line here on the SPY, which we've broken now. And, it kind of had that bear flag look to it. And we broke down. So where's next? Well, the big target is down here at the 200-day, which is all the way down just below 500. Do I think we get there? Who knows? But right now I don't have anything. We can kind of see after hours data here. I don't have anything in my patterns world setting up yet, so I'm not really looking for direction. Yesterday we kind of came in. We were over the last few days we'd seen this set up which is why yesterday when we came into the market, I'll flip back over to ES. Okay, so yesterday or all week I'd been sort of pointing this out and waiting for this move here. You know, we kind of had this structure here. So when I said yesterday, pre-market, you know, let's be looking for a retracement, and actually I had this short at 5600, which I rode for like 15-20 points, and you know, missed a lot of this move, but that's okay. I got in on various spots and took some nice reflex longs yesterday. But that's the power of these harmonics on a large time frame. The textbook on these trades is, you know, you have your X point, your A, your B, your C, and your D. So you get this C to D leg here, which we got the day before, or a couple days of that move, and then yesterday we got the retracement, and the textbook says it should retrace back to C, which we got that and more. But you know, that's why you draw your Fibonacci's and you take profits on the way down. So where are we now? Well, I did take a long here this morning. In this area here, I saw a little bit of a, you know, another one of these patterns setting up on a micro time frame. And actually, if we bump over to the 5 minute, it looks like we've got a little bit of a larger one now. So this is going to keep going, and I still have runners in it. So this can get up to the 45.12, 45.20 area. We'll see. But that was a decent spot to long off of the lows there. Let me get rid of my Fibonacci here. So this area here that we're coming into, we have a monthly, weekly, and a daily pivot right here. So that's kind of why we were grinding here for quite a bit. 3 solid pivot levels in this zone. So if we can get up above here and above this 33 area, then maybe we can see some upside. There's going to be some resistance here at 42. So 33.42, break over here, then 33.42, and then we can start looking for some targets further up. And then obviously if we take these lows out at the 76 area, then we'll open up some more downside. SPX, let me take that tool off. Let's see where we're at on the SPX. So we have a pretty defined area down here. If we lose this 5400 psych level, you know, we kind of dipped below it a couple times, but we're probably gonna what was the spread, Gov?
35. Right now we'd be opening right around the 53.70 area in the SPX.
So we're gonna be opening below this wick here. We have a little support here. I have like 74, and this is the gap fill from June 11th.
Yep.
Yeah. So we'll kind of see how we react over here. Could be a decent base spot. I have another level down at 53.27 would kind of be the next area, major area down. So keep an eye on that. I don't see any other gaps until way down here, so hopefully we'll see some basing, but just be aware of that on the SPY. You know, we're below all of our major moving averages. We've broke this bear flag, and if we go to the weekly, we're still, let me remove drawings. If we go to the weekly here, we do have this 21 day down at 529.49. And that's a significant level where we bounced back in April. So that would be a target on the chart, something to take note of on the SPY. We're not too far away from that, about $6-7. Again, that's 529.49, so keep that level on a notepad. On the individual stocks, nothing really I'm too interested in right now. Just kind of see how things play out, especially Friday, capital preservation day, maybe some zero DTE opportunities, but I'm certainly not looking at getting into any swings right now. This weekend coming up, chances are we're going to see a little Iranian activity. So a lot of geopolitical risks out there right now, plus election year. We got a VIX here at over $20 now. That's one thing I sort of noticed is every time that we've been up in this zone on the VIX, it's kind of been sort of a topping area since May 23, here in October 23, and April 24, and now we're back in this zone. So be aware of that too.
That's a good note.
Something that I was just eyeing this morning. Bitcoin kind of grinding in this same zone too. Still stuck in this, basically 60K to 70K zone. As Dan mentioned, IWM's just got smoked. It looks like we're going to complete this weekly bearish engulfing majorly because we're down here now. Unless this has a major rally back up over 217, 218, we're going to end the week with a huge bearish engulfing on the weekly. So anyone that was long IWM is not too happy right now. Unemployment data came out, was not very good. I'm sure Powell probably, if he could backtrack, would, they have a dual mandate, which is obviously dropping inflation and then obviously trying to curtail any major unemployment situation. And that was a 0.2% month-over-month uptick. It was, relatively significant, and I'm pretty sure we're going to see a rate cut here at the next meeting. So I'm sure that's what the market is starting to price in now, and obviously seeing a little cracks in the economic data. So got to be a little bit careful. There's definitely a little, macro's not my forte, but if Dan was on that, I'm sure that's what he'd be saying is start looking out for those areas of weakness, especially those companies that are not profitable. So I'm actually just taking another scale here at $13 on my long. I'm in runners.
You're still long?
Yeah.
Okay, nice.
Just runners. That's pretty much it. Gives us 10 minutes to get some coffee, get ready for the open, keep an eye on the different sectors. I'll be watching, all the different XLEs, XLF, XLK, see where the money's flowing today or flowing out of. Obviously watch tech, watch NVIDIA. That's down at support here. Excuse me. Earnings, DoorDash kind of gave us a decent move yesterday. We had Amazon, I mentioned that dropped below. Let me go to daily. That's kind of reclaimed it a little bit here, but it's basically right around its 200-day. So that could be an interesting one. I'm just not all that confident of getting long anything right now, but not a bad spot for it. Decent support zone here. Maybe I'll take a look at a zero DTE if I come in on a smaller time frame here and see a possibility for a decent move back up. Using the 200-day as your support, it's not a bad trade. And obviously Apple. A little bit of a pattern here. You kind of have that look to it. So that might be worth a little zero DTE action on the upside. If we see that setting up nicely.
That could be. I mean, we're really really overcooked. I my gut is I think this will probably be there's going to be a couple of stocks that just got absolutely whacked. That a lot of funds that are looking to just kind of add, even though we even given we broke so many big trend lines. That I mean, a lot of people are thinking SPX down in the 5,200, 5,300 area. That's the next target, but for overnight and this morning, um, you could see some selective buying that puts a little bit of a bid into the market. I mean, and all of that is just a little bit of a retrace. Then people are going to preserve their money and go, you know, go sit out over the weekend and figure out what they really think.
Right.
And that's where there could be a chance for more of a sell off on Monday and maybe down into that 52, 5,300 area. And that's where some buyers will come in. That's pretty key down there.
Yeah, this sort of scary thing is now that we are dealing with an SPX that basically got up to 5,700. Our last sort of pivotal low was down here at October 22. And if we take our Fibonacci's from there to the all-time high, we're basically just down at this first Fibonacci. Actually, we're a little lower now, but we can come down to, 5,100, 50, 50 or 4,800. And that's still, it's a decent sell-off, but it's not, it's relative to this huge move that we've had over the last, almost 2 years. It wouldn't be huge, and then if we go back to COVID lows, which is here, we've just had this huge move. Let's take this to here so you can see. This was once we entered into the bear market beginning of 22. From COVID low to the all-time high then, we had a 50% retrace to the penny. So it's just kind of cool to look at those and to see where we're at. We're barely...
Yeah, so what would be a 50% retrace off of that 5,700?
45.80.
54.80?
45.80.
45.
Yeah.
Oh, that's quite a bit. I don't quite see that. But
I don't either. I mean, there was a lot of things happened to cause this.
I mean, the whole COVID thing. I mean, things just got shellacked. The economy did. So.
Yeah. Well, this was after COVID, from those lows to the highs. This retrace here, this was once Russia shit started and.
Oh, the Russia-Ukraine?
Yeah, and then obviously we were just in that lunacy of the 2021 situation where everybody was making hand over fist on shit companies and NFTs and crypto, and we're kind of in a similar spot as far as that, like Dan's pickle coin. And all of these different crazy things.
Mr. Pickle.
Right. So I'm not saying that we're going to see a 50% retrace, but just something to be aware of, that although things look bleak after a couple of weeks of weakness, we're barely 10% off the highs. So yeah. Anyway, Capital Preservation Friday. I got a nice trade off the, just a few, maybe 10, 15 minutes after the data that came out. So I'm not in a hurry to rush into anything else. We'll watch out for some decent setups. We'll be in the room and trade safe.
Yeah, there will be some opportunities, but there's going to be some slippery moves. So everybody, please just do yourself a favor. Go down to quarter size. I already have quarter size in my head. You know what? It's just the way it is, because you'll think you're looking at 2 to 3 points of risk, and you don't realize it could be 5 to 7 because how slippery this was yesterday and overnight, and now this morning. So I mean,
Absolutely.
crazy things happen. You just don't need to lose 5, 10, 20 grand on a couple of trades. That's just nuts. So you don't have to do anything. Let's maybe just watch. So I'm pretty much just going to be watching the opening, and we'll see what presents itself.
Absolutely.
And I'm looking for some more coffee. Good luck, everybody.
All right. Have a good one.